Hello guys, this is Pedram Braufi and you're watching the market review. During this program we are going to check the situation on the stock market, on the Forex market, and of course on the cryptocurrency market. We are going to check all the main Forex pairs, the stock market indexes, and of course the cryptocurrency pairs which we have on our platform, our trading platform. And first of all, we are going to check what is going on the markets. As you remember from previous time, we actually told you the situation on the stock market is going to get better, and that was the situation which we had from the previous week, the reversal from the bottom, or as we can say, from the local support of the market. And what we have now is the renewing of the maximums. As we said, the renewing of the maximums is the thing that we are going to have. And Dow Jones is retesting the local maximums, but it's not renewing the maximums yet. But the S&P 500 is a more is actually index that get a really straight impact from the high inflation. And just some days ago, we had really amazing news from China that was about the Chinese bank is going to ease monetary policy further, and that's a really good news for the world's market, actually. So the situation which we could have during the New Year's Eve, during this week, could be really positive. Anyway, be careful that this upward movement that we have nowadays, this upward movement that we have on the stock market nowadays, is the kind of the last one. And the prognosis for the stock market for 2022, for the United States of America, for the United States stock market and Chinese market as well, is not really well, but there would be a better points to get into the market as bulls in the future. For Chinese stock market, maybe in the near future, but not for the United States stock market. So the situation which we have here and now is actually due to our prognosis, which we told you from previous week, and the prognosis for the Chinese stock market, maybe for today and for now, it could be not so bad, as we see on the daily chart of China A50 and the Shenzhen Composite, and on the Shanghai Composite as well. We had some reversals from yesterday, but this reversal and this upward movement which you have today on the indexes, on the main index of Chinese stock market, they won't be really truthful. So we are actually waiting for the nearest reversal, and the renewing of the bottom of the market of Chinese indexes is a realistic thing that would happen in the near future, but it would happen faster than the United States market. So we could get into the Chinese market maybe really faster than as a bulls, as buyers, really faster than into United States market. So what can we actually recommend for our day traders? Because we just told you about the situation which we could become true during a week or during some months, but situation for today's day and what kind of volatility we would have for today is actually important as well. So due to the economic calendar for today, the volatility unfortunately won't be really high due to the emptiness of the economic calendar. Firstly, as we see at 3 o'clock by Greenwich time from the United States of America is CB consumer confidence with no prognosis. So the only thing that we can say about today's market, it would be consolidational. As we saw on the S&P 500, on the Dow Jones charts, they are actually above local maximums. S&P 500 is above maximums, and Dow Jones is retesting the local maximums. So what we could really have in the near future, maybe if the amplitude continues to be like this, maybe we could actually observe the next upward movement, the continuance of this upward movement, but in some way, this upward movement have to finish in the near future, and we are going to have a reversal anyway. I'm not talking about the kind of correctional reversal or the reversal which could continue during some months. No, I'm just telling you about the really short-term reversal inside the channel in which actually S&P 500 and Dow Jones are moving during previous weeks. And the situation of with dollar index, which is actually important. After this review, we are going to check the Forex pairs with dollar. And as you know, the dollar index price has an opposite correlation with the stock market indexes. So situation with the stock market in the near future could be downward. It could be reversal. And of course, dollar indexes could make, due to the daily chart, it could really make some downward impulse, but we are waiting for reversal upward. So in the near future, maybe we are going to have some downward impulse due to the chart of United States dollar. Maybe in the near future of today's sessions of America, tomorrow's session of Asia, or tomorrow's session of Europe, we are going to have some downward impulse for dollar. But after that downward impulse, if it really happens, we could really get some reverse, and we could get reverse from the bottom of the market, and dollar could really continue to move upward inside this channel that we see on the chart of daily chart of United States dollar. And let's see what we can do with the Forex pairs which we have due to the prognosis which we just made and due to the situation which we have today with the markets. So we're gonna start from Euro USD, from pound, move along with pound to United States dollar, and New Zealand dollar, Australian dollar as well. So the situation with New Zealand dollar and Australian dollar is actually showing you the tendency that could actually happen on the GBP and Euro as well. So what we're actually seeing now, due to the chart of Australian dollar and New Zealand dollar, is shrinking of volatility in a form of the channel, in a form of, let's see, on the 5 minutes, so it would be more understandable. It's actually shrinking of volatility in a form of a wedge or a channel near to the local maximum. So here, the most realistic thing that we can rely on is that we are waiting for reversal. But before this reversal happens, we could get some upward impulse. For scalpers, maybe today could bring some profit to just buy by the help of this impulsive movement, which could happen, which is actually the downward movement of dollar, which could which could actually appear as a upward movement of New Zealand dollar, Australian dollar, Euro and pound. So here, an upward impulse is really realistic. And if this upward impulse happens on the chart of New Zealand dollar or on the chart of Australian dollar, we need a closure of the next candle, 4-hour candle or 1-hour candle, under 0.7250 for Australian dollar, and for New Zealand dollar, we need a closure of the 4-hour candle or 1-hour candle under the 0.68. So 6820, I'm sorry, 6820. And if we get such a picture, the next reversal and the probability of next reversal would be higher. So what is going on with Euro and GBP and pound due to the 15-minute chart? The shrinking is not really obvious here, but on the Euro price chart, but we have some widening of volatility, which could as well mean that prices are going to make some sharp movement. This sharp movement could be upward, and if this sharp movement is going to be upward, we need the closure of next 1 hour or 4 hour candle under the local maximum of 1.1335, I'm sorry, 34, 1.1334 or 3350. So let's say 1.3350, and we need a closure of the candles under this level. So if after the impulsive, if we are going to have an upward impulsive movement, which means that we are going to have a downward impulsive movement for dollar. And if this thing caused the upward movement, nearest upward impulsive movement on the chart of euro, pound, Australian dollar, and New Zealand dollar, and if we get the closure of candles of 1 hour chart on the 1 hour chart or on the 4 hour chart under these levels, under the local resistance levels, the picture of next reversal would be more realistic. But for the nearest future, the continuation of upward movement for all of these pairs to United States dollar is more realistic in the near future. So what is going on with gold and commodity? Commodity prices, as you know, gold, silver, platinum, and palladium. All of these assets move against the stock market somehow and move against dollar. But why, even due to the high inflation of previous year and this year, we actually doesn't have such amazing rise of a price of gold? And could really the price of gold be under the pressure and remain under the pressure during next year? Nobody knows, but the main thing is that if the United States Federal Reserve System is really going to hike the interest rate, if it's really going to make the monetary policy more hawkish during the next year, the probability of gold price downward movement or consolidational movement during next year would be really high. But the other thing which really could help gold prices to continue the rise somehow is the dovish tone of the Chinese central bank president. And actually we have a tightening of monetary policy, and we have the opposite side, which means that the bank is going to higher to actually choose a higher plans for QE, and is going to actually give the market more cash, which would ruin the yuan, the Chinese yuan, but it would actually help the gold prices to maybe rise. And due to this optimism which we had previously, the gold prices on the daily chart, on the 4-hour chart, is kind of rising, and this rise could really continue. But the impulsiveness of this movement which we have here, due to the 1-hour chart, and because of the shrinking of the volatility, a really long-term, kind of mid-term shrinking of the volatility near to the local resistance, this impulsive movement could really continue, but we cannot rely on it. We cannot rely on it because this impulsive movement in the midterm during some 2 or 3 days could cause some reversal, and that's more realistic than ever. But if you are bulls, if you are thinking about gold bullishly, if you have some insider news, or if you are so sure about the next gold rising and upward movement, you should actually do something with it. And the continuation of upward movement here, this impulse really could continue. Due to the news background, due to the Chinese central bank policy, and due to all these fundamental factors, gold could really continue to rise. But the situation which we could have next is the reversal, which we are waiting for gold. As you see, we had here a really, really important resistance after the retest of which, after the impulsive retest of which, especially, we could get reversed in the midterm during some days, during 2 days, 3 days. So we have to be really careful, but the continuation of upward movement in the short term is the main thing that we can actually rely on during the day, during some sessions, during the future sessions. And if you are going to trade with it, you have to pay attention on the 5-minute chart or 1-hour chart, because the volatility here is really shrink. And even on the 15-minute charts, here actually with a really big stop losses, you can get into the bull market with a really big stop losses. So be careful with the bullish targets which you have during next sessions for gold, because the situation which we have here, it really could get a reversal picture. Sorry, in the near future. Let's see what is going on with US dollar to Swiss franc and US dollar to Japanese yen. As we see, US dollar to Japanese yen is rising more sharply than US dollar to Swiss franc, and mainly we can say that Japanese yen is less powerful than Swiss franc because of some policy which the Premier Minister of Japan just previously 1 month ago, he just actually continued the stimulus program of the country. So the continuation of the stimulus program for Japan means that the yen is going to be under pressure. And this upward movement which we are now observing is the thing that we were really sure about during previous months because of the new Japan Prime Minister policy, which was about continuing the stimulus program of Japan, which could actually help the economy, but it would make the Japanese yen to fall, which would actually make this pair to rise. Due to the daily chart, today's opening is really great, and in some way, maybe even in the near future, we could have some upward impulsive movement, but maybe it would be better choice to wait for a correction, especially for an impulsive correction like here. And after this kind of correction, maybe we could get into the market, and it would be a really good place to be, because the rise of Japanese yen is really moderate, and its falling is really out of control. So when the falling is out of control, when the falling is really impulsive, it means that actually this trend is going to be upward in the future. But because just now we are getting near to the local resistance, it's not a really good, as we say, moment to get into market, to get into bullish market. So what is going on with WTI, the oil prices? And let's see what happened from previous time when we talked about oil prices. We told you that the oil prices actually reversed from the local support of 66. Amazing. And actually it got strengthened above $70. So the situation here is really bullish, and this upward movement could continue. But the only thing that disappoints me is this impulsive retest on the daily chart, midterm chart. Yeah, this impulsive retest of this resistance, which could really make prices to get some reversal movement in the near future, especially due to this mild divergence which we have here on the chart, on the daily chart, 30-minute chart or daily chart. We have this divergence. So the situation for the nearest, maybe next sessions could be really downward and could be really pro selling, but prices are going to return to the upward movement anyway. So don't be so pessimistic about oil. Due to the 2 Canadian dollar chart, we can actually see the situation. The dollar price, US's dollar price, get lower if the oil price is rising, and this pair as well could really make some downward movements, make some downward impulses if the oil price is going to rise. But due to the situation which we have now, the probability of downward correctional movement of oil, we could actually make some prognosis that maybe price is going to retest the local resistance or the mirror level of 1.28. And this is a really important level due to the scale which we have on the 15-minute chart. And after the retest of this level, maybe it would be a better time to get into mostly sell midterm positions. And let's go and see what is going on with the Bitcoin prices and Ethereum prices. Both of them not really showing us any more disappointment than believe in continuation of upward movement. Pay attention that Ethereum and Bitcoin in the near future, they could again, they could get above 50,000, and Ethereum could really get above 4,000. But it won't be a signal for buys. It won't be a signal for buys. They could make this movement. They could make this movement to just fool the bulls. Fool the bulls, which are going to just get into the market and just think that maybe the reversal is going to happen now. So don't forget to Don't forget to monitor the market. Don't forget to actually check the market. Don't forget to check the news background of the cryptocurrency. We have different pairs of the currencies on our platform and different kind of instruments actually on our platform, which could help you to trade with different kind of assets. And don't forget that you actually need to just you can actually learn more about the instruments that we have on our official site of Gerchik Co. And on the site, we can actually find different kind of instruments with most of them actually are free, and most of the instruments on the platform are free as well. But you just need to maybe for start try to register and try to just buy the demo account, get into the market and just check the opportunities which we have on the platform and what kind of interesting thing we are actually making for you, so your trading won't be so boring. On our main sites, official site, you can actually check this information. Don't forget to subscribe on our channel, and till the next time guys, have a good tradings and have a good day. Bye bye.